Hello. Now we're gonna do dropping unprofitable products or segments. Again, we're still in managerial accounting, chapter 25. Pharos Hats has two product lines, baseball helmets and football helmets. So we have two products here. Okay. Baseball helmets and football helmets. Income statement data for the most recent year follow. So he gave you three columns: total, baseball helmets and football helmets. So if you look at this income statement, you can see that he's doing sales revenue less variable expenses equals contribution margin less fixed expenses equals operating income or loss. This is for the total company. Okay. If you look at the baseball helmets and football helmets lines, one of them is suffering from losses, which is football helmets. Now you need to think, shall I keep this line or drop it? Which is better? Okay, will dropping the football helmets save money or not? Okay, so now if we drop the football helmets, sales revenue will become equals to 0 and variable cost will equals to 0. Now the only thing that you need to think about is the fixed expenses. Will I still pay those fixed expenses if I drop this line, or I'm gonna continue paying the 90,000, okay, which is this one. So we need to know if it's direct fixed expenses or allocated fixed expenses. Okay, direct fixed expenses means it's directly related to this line. So if you drop this line, you're not gonna pay it. Allocated fixed cost, it's like the rent of the factory. You are allocating this cost to all the projects you have. So even if you drop this line, you're gonna still pay this amount. Okay, so he needs to mention if it's direct or allocated. Now he said here if 50,000 of fixed cost will be eliminated by dropping the football helmets line. So eliminated means avoided, so it's relevant cost. What's the difference between relevant and irrelevant? Relevant means there is a difference between the options. Okay, it means if I drop the football helmets, I'm not gonna pay this amount. Irrelevant if it's the same under both cases. Okay, so now how will dropping football helmets affect the operating income of the company? Now we need to prepare something called differential analysis. Differential analysis. What's gonna happen if I drop this line? Okay, we said sales revenue will equals to 0, so it's gonna decrease by how much? So sales will go down, will decrease by 350,000. So since it's gonna decrease, it's negative. Okay, now variable cost also will decrease. It's gonna become 0. Okay, so variable cost will decrease by 280,000. He said 50,000 of fixed cost will be eliminated by dropping. So fixed cost will decrease by 50,000. Okay. So the total decrease by cost will be negative 330. Okay. So now what's going to be the effect on operating income? Will it increase or decrease if we drop this line? Now we have negative 350 less the negative 330. So it's going to be negative 350 plus 330. So it's going to be negative 20,000. Okay, so my operating income, since it's negative, will decrease if I drop the football helmets line. Okay, so now what's the difference if I keep and if I drop? If I keep the football helmets line, my loss will be what? 20,000. Here, this one. If we keep it, I'm gonna lose 20,000. If I drop it, I'm gonna lose more 20,000. So this is the difference. This one, it's differential analysis. Okay, so I'm gonna lose more 20,000. This is the difference between the two options. It's not the final answer or the final loss. So I'm gonna lose 20,000 if I keep it. If I drop it, I'm gonna lose more 20,000. So in total, I'm gonna lose 40,000. And what's the 40,000? It's the irrelevant fixed cost. Okay, so fixed expenses in this question is 90,000. If you drop this line, you're gonna avoid paying 50,000. So you're gonna still pay the left, which is the 40,000. Okay, 90 less 50. Okay, 90 less 50. This is the fixed cost that you need to pay even if you drop this line. 90,000 less the relevant or the avoided, which is 50, equals 40,000. Okay, so which is better here? What's going to be your decision here? To drop or to keep this line? Which is better, to lose 20 or 40? Okay, I need to choose to keep this line. So do not drop. My decision will be do not drop the football helmets line, because my loss will be lower if I keep. Now here we have another question. Paul Company has 3 products in its retail stores: books, videos, and music. Okay, so we have 1, 2, and 3, and this is the total. The allocated fixed costs are based on units sold and are unavoidable. So the allocated is unavoidable, means it's irrelevant to my decision. I'm gonna pay it if I keep or I drop the line. Demand of individual products is not affected by changes in other product lines. Results of the fourth quarter are presented below. Now, when you see a question like this, you need to look at the income. Okay, so here, revenues less variable departmental cost less direct fixed cost less allocated fixed cost equals net income or loss. Again, here he said the allocated is irrelevant to my decision. It's unavoidable. I'm gonna pay it if I keep or I drop this line. So if we look at books, music, and videos, which one or which product line I need to think, shall I keep or drop? The one which is suffering from losses, the videos. Okay, so here he's saying prepare a differential analysis of the effect of dropping the video product line. So what's gonna happen if I drop this line? Differential analysis. Okay, again, if I drop any line, sales will become equals to 0, variable cost will equals to 0. we need to think about the fixed expenses. Is it relevant or irrelevant? Now, we're gonna have decrease in sales by $30,000. It's decrease, so it should be a negative. Decrease in variable cost equals to negative 23,000. Direct fixed cost, it's what directly related to this line. So if I stop producing the videos, I'm not gonna pay direct fixed cost, so it's gonna also decrease direct fixed cost, which is negative 4,000. Now what about the allocated fixed cost? He said it's irrelevant, unavoidable, so I'm gonna continue pay the 8,800. Okay, so there will be no difference, so I'm not gonna include it in the differential analysis. Okay, so now I have decrease of 30,000 in my sales and decrease of 27,000 in my costs. So what's gonna be the effect on operating income? Will it increase or decrease if we drop? Let's see. Negative 30,000 minus negative 27, so it's gonna be plus 27, so it's gonna be negative 3,000. So operating income will go down since it's a negative answer. So let's compare between the results. If I keep and if I drop, what's gonna be my loss? If I keep, I'm gonna lose what? 5,800 here in the income statement. So I'm gonna lose 5,800. If I drop, I'm gonna lose more, 3,000. This is the difference, 3,000. So in total, I'm gonna lose 8,800. And again, which is better, to lose 5,800 or 8,800? 5,800 is less. Okay, so the decision here will be, again, do not drop. And what is the 8,800? It's the fixed cost, the unavoidable fixed cost, the allocated fixed cost that I'm gonna still pay 8,800 even if I drop this line. Okay, so the decision rule here to drop unprofitable product or segment: if lost revenues exceed the total cost savings, do not drop. If the lost revenues are less than the total cost savings, we drop. So if the operating income will decrease if I drop this line, I'm not gonna drop. If the operating income will increase if I drop this line, I'm gonna drop. Thank you for watching. If you have any question, please leave a comment. Please like, share, and subscribe.